Gentlemen, it's great to be here with you. Let's jump straight into it. It's a packed day, as Thorold said. So, Governor, if I can start with you. As Jerry said in his introductory remarks, we're meeting today at a time of starkly contrasting growth stories across the continent. Kenya has emerged as a poster child of resilience, not least because you've had more success than many of your peers in diversifying your economy. I wonder if you can tell us a little bit about your sense of whether that diversification is putting you on track for more robust growth for the next couple of years, and what you think from a policy perspective was the one most important thing that enabled you to get the leg up on many of your peers.
Thank you. Thank you very much, and Joe, and it's good to be here. Thanks for the invitation. So how have we diversified? I think the one item I would probably flag in this, the most important, is just having a very robust and dynamic private sector. I think that's really, without doubt, what has made us benefit from the obvious, let's say, advantage related to, say, the geography. We are very close to a lot of the other countries, and also in terms of diversifying the production sectors, and indeed even the exports and things like that. So from my perspective, I think what happened, we are very much the accidental diversifier. So I think you cannot quite talk about a specific policy that was pushed and then led to this sort of outcome. But I think what happened here is the private sector did see the opportunities and moved in to utilize those opportunities. What is happening now is you have other investors, external investors, seeing the benefit of that, of the diversification that is there, seeing the resilience that has resulted from this diversification, and they're moving in to invest in Kenya, using that as a launching pad for their activities, potential activities in sub-Saharan Africa and so forth. So in a sense, you do have a sort of, you'd call it a virtuous cycle that has emerged. And I think this bonds very well to the outcome, or should we say the prospects of the economy.
Uche, I wonder if we can call what's happening in Nigeria the beginnings of a virtuous circle. It's perhaps been a bit of a vicious circle over the last couple of years. The outlook has been very different after the crash in commodity prices. We've read a lot about the challenges that the economy is facing.
Sure.
But we haven't read so much about the kind of work the Sovereign Wealth Fund has been doing to mitigate the worst impact of this downturn. And I wonder if you can talk to us about your work and also whether you're starting to see the beginnings of a shift in the cycle.
Sure. Thank you very much. I will say that for Nigeria, the latest statistics will probably suggest that we are nearing a bottom. So you've seen the rate of economic deceleration start to slow. So the last GDP numbers came in at negative 1.5. And that is just as we continue to react to what's happened with oil price. My view had always been that 2017 will be a much better year than 2016 was. And to that extent, we've started to shift our investment focus of the Nigeria Sovereign Investment Authority from an external focused investment to domestic. Up until now, our domestic focus was less than 6%. We anticipate by the end of the year, we should be nearing somewhere in the teens in terms of the investments we're making domestically. And the reason is simply because one of the things that's happened is the downturn has thrown up significant buying opportunity in the country, and we see it across most sectors. And we can say this sincerely because we made a decision not to participate because we thought things were a little bit overvalued, through 2014, part of 15. And now we're starting to see valuations come in. And you can see that in real estate, you can see that in manufacturing, you can see that in the stock market, and you can see that in the currency itself. The other thing I would probably point to is that, it's also an economy in transition. The Nigerian economy is more diversified than people give it credit for. What's not diversified is government revenue. It's over 90% of government revenue comes from oil. But oil accounts for less than 20% of GDP. It's actually about 16, 17% of GDP. Agriculture is about 30, 35%. There's manufacturing. There's other sectors. So trying to link the diversified economy to government revenue is actually the challenge of this government. That's why you're seeing effort at closing the gaps in the system. improving tax collections, and ensuring that we can actually manufacture to a standard for export. So I'm hoping that 2017 brings us to a point where we can actually take advantage of the weak currency to start to see some of our goods get out there in the marketplace.
We will talk about the currency later. I have a couple of specific questions about that. First of all, back to the governor on diversification. One of the areas where, again, you've been a continental leader is in technology, and it's something we want to talk about a lot today, the idea of how technology can drive growth. You've clearly, everybody's aware of the great successes in financial technology and Silicon Savannah, but it's a criticism that's been leveled recently about some of these technology companies that perhaps they were better at getting headlines than actually making profits. And perhaps they were more focused on altruism or charity in some cases, rather than profitability. I'm wondering how you see that sector evolving in Kenya and what the government can do, what regulators can do to provide the best possible environment to make it profitable.
First, I think it's true we have had some companies that have been more excited about headlines, more excited about explaining what new widget or app they've come up with, and how this is going to solve all the problems of the world as we know them. I think what we've been pushing is a sort of better focusing on a particular problem, so customer focus. So don't put together an app that is not focused at a particular problem. So if you're whatever item that they're fixing, so whatever innovation or innovative tool they come up with, they need to ask themselves the question, what is the problem that this thing is going to address? So don't create an imaginary problem and try and resolve it. Look at the problem, see and there are tons of problems out there, hundreds of problems, and work on that. So be focused on the customer, be focused on the needs of the customer than anything else. Now I know there's the classic question, or rather retort, that when Steve Jobs put together the iPhone, he was asked, well, gee, did you actually go out and survey the customers and so forth? And his answer was no, because customers don't know what they need. So at one level, sort of high sort of innovation, yes, it's true. You cannot quite exploit you cannot get a good handle as to what the gap is, what the customer needs. But I don't think that happens often. Most of the innovations that we are seeing are much more, let's say, they're not at that level, and therefore there is actually a particular need that you're trying to address. We are really, I think, proponents of pushing fintech.
Right.
There are so many problems that can be resolved, and we have tons of problems that can be fixed with the technology as we have it. So I don't think it's there's a lack of opportunities. And all these opportunities, of course, are also good for the bottom line. But I think a lot of them will be transformational.
I know that, I'm not sure whether Steve Jobs, went to Nigeria, but I know that Mark Zuckerberg did. He was in Lagos and in Nairobi, I believe. Clearly there's an opportunity in technology. There's opportunities, as you were saying, in agriculture, in finance, a lot of pent-up demand. But, I think a lot of people in the audience will also be concerned about the policy environment at the moment. Perhaps there's questions about clarity, whether it's FX policy, other aspects of industrial policy. I wonder what message you have for people here who are waiting to get back into Nigeria, who think it's a great buying opportunity, but are just a little bit concerned about navigating that environment.
Right, and I think I share the concerns, but I also like to try and be more specific about the point about lack of clarity, because you can talk about clarity in a superfluous manner and it's difficult to pin it down. If you talk about currency policy, that's a separate conversation.
Sure.
But there are certain sectors where there is clarity about what it takes to come in and invest in the country. I happen to sit on, attend occasionally a meeting on the Presidential Enabling Business Environment Council. I mean, it's a mouthful, but it simply says we're trying to make it easy for people to do business in the country. And that's everything from visa policy to ease of opening up an account, ease of setting up a business, to ensure that people can come into the country. And there's a lot that's been done there. And some of you might actually find that those who have been to Nigeria before, where it's difficult to get a visa, you can actually get a visa. We had people come in 24 hours, you got a visa in Holland. Agriculture is very clear what's happening in agriculture. We're investing a lot in agriculture in the Sovereign Wealth Fund in Nigeria, and we've done that two ways. One is direct investment ourselves, And the second is we've created a co-investment fund with a South African-based company backed by Old Mutual. We put in $25 million, they put in 25, and we're raising 150, so that's $200 million fund to invest in agriculture in the country. It's amazing what there is to do. In tractors, for example, I mean, I think the country has something less than 5,000 tractors for the size of the country, right? So just think about what opportunity that is. In terms of use of fertilizer, it's a tenth of Pakistan, right? So one of the things we're working on today is trying to make it easy for farmers to get fertilizer on time, 30% below market through contract blending. And we're doing that successfully. So far, it's starting to ramp, and my sense is that you're going to see yields improve. So there's a clarity there. Industrialization, yeah? There is also clarity as to what it takes to get into certain sectors. Of course, the oil sector is a little bit confusing for people, and I believe that will be clarified soon. But there are other areas where there is clarity as to what you can do. So I think if you look at again, I want to just address the big elephant in the room, the currency policy.
Sure.
There are two things I'll say to that. One is it will be solved, and I believe if you have medium-term, long-term expectation for investment in the country, you should take advantage of the moment. We've been through this before. I have seen it in Nigeria. I saw it in the 80s. I saw it in the 90s in the country when I was a commercial banker before I left Nigeria. It always finds a way to get resolved.
Do you think we're nearing another revaluation? There's still a huge spread, of course, between the black market rate, which was almost 5.20 earlier this month, 3.15 says the central bank.
Sure.
There has been a bit of a movement just in the last couple of weeks. Are we nearing some kind of resolution, policy resolution to this?
You can't solve it sustainably until you solve the liquidity problem. Right, the whole price discovery process is at the moment difficult because you have to solve the liquidity problem. So it's one thing first before the other. Now, I'm a market participant, so I tend not to have any superior information than you do because we try to make sure the sovereign wealth fund doesn't take advantage of information that it has. But the reality is that I know there's a lot being done. There's a lot being said to be done to solve the liquidity problem. And the first attempt at that is the Eurobond issuance recently, which was very successful. And that's just another secret people don't realize. Nigeria has never defaulted on its debt. And so I was actually quite surprised when there was skepticism as to whether people would buy this debt. You just need to study the market a little bit better. So the point I'm making is that was the first step at solving the liquidity problem. The Minister of Finance says there'll be more to be done there. So once the liquidity problem is solved, we can now figure out what the real price is. Otherwise, even if you floated the currency, where's it going to settle? So you've got to solve that first. And there's a lot being done to solve that. Beyond that, I really can't tell you when. But what we're saying is, I know that if you're investing on a 5-year horizon, we're investing on a 20-year horizon. The valuation today is compelling, and at some point, the solution is going to come. And you better be positioned for it.
I just want to zoom the camera back a little bit. We're meeting today in a very kind of uncertain external environment. And I want to talk a little bit about the risks that Africa is facing. I've already been chatting to some people earlier today, and Jerry mentioned it too. One key concern, I suppose, question is about US policy and whether protectionist rhetoric will turn into reality that will affect Africa. I'm going to get the audience involved at this point, or at least we're going to trial this survey. This is a kind of insufficient poll because, of course, risks in Africa sort of depend on where you're sitting. But I'd like you all to vote, if you can, on one of these 4 biggest risks for African economies or the African outlook this year. Is this working, or? Here we go. Oh, this is President Trump still.
Oh, he's come back a bit, 69%. If you keep it open for
Well, let's talk about the Trump factor then, first of all, with the governor. We've had nothing, I think, concrete from the president so far, but the administration's rhetoric is being interpreted as meaning a significant retrenchment, perhaps, from Africa. You've said you consider this to be possibly the biggest risk to Kenya this year. Can you talk to us a little bit about that and what you can do to mitigate, perhaps?
Sure. It's true, we consider the Trump effect and the policies of the new U.S. administration as sort of the biggest risk for us in Kenya, and indeed, from my perspective, for all of Africa, and indeed also the entire world. And why we say this is because there are too many. You could think of the baseline scenario, which is everything goes fine. They put together what could be considered as sort of a strong fiscal package, and do not in any way sort of take policies that are let's say, protectionist and so forth. And that would have us growing at the rates, world growth rates, that 3 and 3 and a fraction and so forth. Not very high, but at least that's good. But of that baseline, you have other scenarios that are problematic. If indeed we get into a very aggressive, let's say, protectionist policy, that would be detrimental to emerging markets. That would be detrimental to, in the long run, also in a sort of spill-back way to the U.S. as well. And so you can very well see a scenario that will end up being, let's say, negative for global growth. That is terrible for Africa. That's terrible for Kenya. Mm-hmm. We are very open economies. So to the extent that we depend on the global economy, we will actually get hurt in all this. Of course, there are other considerations. There's a consideration of what may happen in the financial sector, meaning the financial regulation. Well, there are statements about deregulation, pulling back, let's say, regulations that were put in place after the global financial crisis. We have seen that those policies have really been effective and, in a sense, protected the financial sector in the advanced economies and, by extension, the financial sectors and the world economies appropriately. Pulling those back will put us back not just several years, because things now are happening much faster, much quicker than they were, say, 10 years ago. So I think this is a major risk. So there is also the other considerations, which is with regard to trade. The U.S. accounts for maybe 7% of trade with Kenya, or 7% of our exports go to the U.S. About 10% of our FDI comes from the U.S. as well. So you can imagine what may happen if indeed the U.S. becomes much more inward-looking and sort of is not interested in some of the, let's say, positions, or should we say, positions that it had taken in the past. For instance, there's the AGOA Act, which is the African Growth and Opportunities Act. And through that, we export, I think, 93% of all the apparel that goes through that act to the U.S. So if indeed there's any sort of stepping back or stepping away from that act, it will have a substantial impact on us.
But you're not taking any measures as it stands to try and mitigate the risk?
The point for us is we took out some insurance very early on in the context of Brexit. And the insurance here, of course, is better have more reserves.
Right.
Have better policy buffers, more policy buffers, meaning elbow room to maneuver. So we're in the middle of the room and not in a corner solution. So we can take adequate some monetary policy, fiscal policy, and things like that.
Flexible credit facility.
And also we have the IMF facility of something like 1.5 billion US dollars. So we've done all that before the fire, before Brexit, before the Trump effect. But now that we are where we are, we cannot go out and get more insurance because everyone else is looking for insurance. Unfortunately, the entire market is on one side. As we all know, this is the worst time to get anything done or buying insurance when everybody wants to buy insurance. So in that sense, I think the only thing we can do here is to do some more, let's say, diplomacy. And I think the diplomats are well on their way in terms of explaining how this would affect us. And I think it is the same with the Brexit. I'm sure a lot of diplomacy will need to be brought to bear to get a positive outcome. But frankly, it's true. This is, I don't think there's any other shock in recent, I would say, man-made shock, meaning of our own doing that I can think of. Unfortunately, just to finish, one of the things I'm very conscious of this, so much so that on my desk, there's only one chart. Every morning when I come in, there's one chart that I see every single morning, and it is a chart about volatility. And in a sense, it shows me how volatile the world is. That's the first chart I see every single morning.
That's quite a scary chart first thing in the morning.
Exactly. So it puts me, it reminds me that there's a lot of work to be done.
Sure.
Yes.
How does it look in Nigeria? We spoke on the phone beforehand. Of course, the US isn't as big a purchaser of Nigerian oil. Not a lot of your agricultural products are being exported that way. Do you feel that the restructuring and perhaps some of the more statist policies put forward by President Buhari have given you a little bit more insurance against some of these shocks? Or are you still just focused on, at the moment, fixing your own roof?
No, I think the first of all, there are relationships that exist between Nigeria and large US corporates like General Electric and a few others. I don't think that's going to change, to be honest. There's a lot of work being done there in rail, in power, in healthcare. That I don't think. So at the company level, I don't think much will change. Now, I don't know. George Bush says you have to take the man at his word. He hasn't really said much about Africa or Nigeria or any of these policy issues. So until he speaks, we wouldn't know what direction the policy thrust for the U.S. will go. But the one thing that is sure has happened is oil prices rallied since the presidency, and I'm not sure whether that means there's a global take on the oil sector, whether be it against renewable energy or for oil. I don't know how to put it, but the truth is we've seen that happen, and that's been good for the Nigerian economy. It's one of the things that also is helping us recover. So I think from a policy standpoint, we just wait and see.
I'm going to go to questions shortly. I have to just ask you one question. Because we're in London, the president is, of course, here. Everybody is anxious for information about his well-being. Do you know anything about the president's health? And do you believe that when he comes back, we're going to see a change in policy, a change in tone, given that there seems to be a bit of a change in mood music in Abuja just in the past few weeks?
Well, I don't know about mood music changing, but the truth is well, first of all, and I'm just very curious, maybe because I know a little bit more than most people do.
Sure.
This was always discussed as a program, right? And so I, first of all, don't think there's the attempt to pass between the two is just a little bit.
There's Kremlinology going on at the moment.
No, there's just a lot of that. That doesn't really make any sense to me. The truth about it is, I think there are two sides. They're one ticket, right? So some of these policies, I don't think major policy changes will happen without clarification or authorization. So trying to separate the two is a little bit not the right way to approach it. The good news, in my opinion, is that I think the first plan was try and stabilize the economy, restructure it fundamentally. And that is happening. Of course, there are areas where their mistakes have been made. But I think that the rhetoric has always been, we're going to shift to try and use this restructured economy to now drive growth. And again, I go back to one of the policy areas where the president has been clear, and that has been in agriculture. And I can speak to one thing, right? I have seen our roadshows in my organization shift from New York and London to Bauchi State and Jigawa State and places that some of my people have never been to before, as we start to engage domestically. I have seen, and I anticipate a significant yield growth in agriculture, by the way, which by the way, employs probably, I don't know, more than 30% of the people in the country. It's about 35% of GDP in Nigeria. Underinvested. I see investments going into infrastructure. That was always the plan. So I think if that happens now, people say it's a change in mood music, but this was talked about last year as how we will progress in terms of the economic policies of the country. So I don't know any better than you do in terms of the president's health. I mean, he wrote a letter saying, I'm going to go away and look after myself, and I think he's done it the right way, and things just carried on. That's how I would see it. Again, caveat, I have no better information than you do, to be honest, and I think that is shortly because of the way we've positioned our organization, because we are also market participants domestically.
I'm sure we all wish him well. I'm throwing it over to Thorold now.
Fascinating conversation. Thank you very much. We've got a few minutes for a couple of questions. So does anybody have a question they would like to put to this fabulous panel? Over here, there's a lady. We'll bring you a microphone right now, and then I'll come to you. Okay.
I'd love to hear a little bit about how the interest rate cap has gone in Kenya and what the impact has been on the economy.
Should I take it now? Yes, the Parliament put in an interest rate cap on September 14 last year. And basically, it's anchored to the central bank's rate, CBR, And so currently, the ceiling is at 14%. But a quick background on that. Basically, the concerns were or arose because of what appeared to be banks that were lending at extremely high rates. And this was, let's say, also confirmed in a sense that their profit lines were also quite large. So that's the sense, that's the background. If you think of the spreads that of our banks, they are way out of line with most other spreads, and indeed even the return on equity and things like that. That's the background. Now, the caps are put in place, obviously because of serious political pressures. This is a political economy sort of question, no longer just economics. And we have been monitoring, trying to understand the impact of the economy. So far, we don't have conclusive evidence that the economy has been damaged in a substantial way. There is some sort of anecdotal evidence, and I think you know that as much as we do. But I think at this point, what we are looking for is really data that actually makes the point, not the speculation. We, on the one hand, we do know, we do have a view as to why we didn't want this and this interest rate caps. Also, when the president signed this bill into law, he made it very clear that this is a temporary deviation from our position of flexible determination of interest rates and things like that. So we do want to come back to a time when we won't have the interest rate cuts. But so far, we don't have conclusive data. There's a sense, again, that maybe some of the more risky borrowers are being screened out. But I think we have yet to put together all this data in a conclusive way. So I'm sorry to say that the jury is still out. The MPC will be meeting later this month, and they want to look at this in a bit more detail because it's not just in that dimension. There are also other concerns about the impact on effectiveness of monetary policy and things like that.
Fantastic. Here, please. Thank you.
I'm a fintech business owner in both Nigeria and Kenya, and I'd like to support what you said about the Nigerian policies really looking to be more diverse and reaching out to small business owners. But in Kenya, in an effort to be more intentionally diversified, how can we see regulators
Keep going.
regulators and policymakers make an effort to reach out to these technology companies, and I'm a revenue-generating company, to reach out and help them understand what policies for the future, for the more diversified Kenyan economy can be made?
Governor first and then.
Okay. I think this is a good question. Really, I have to say that one of the things I have been wanting to do is to have a sort of a forum to discuss fintech. There's a sense that some of your colleagues feel that the central bank is sort of keeping them away at arm's length and doesn't want to talk to them. That couldn't be farther from the truth. We want to have a conversation with you. So let's see when we could do this. As a matter of fact, there is going to be a few conferences, in Kenya on fintech. As a matter of fact, at the beginning of May, there'll be a conference that's organized by Euromoney on fintech. But I want to have separate conversations with you, with the various experts or the various people in this area, just to tell you how we see things and for them to understand how the regulator looks at these things and, in a sense, close the gap in terms of, let's say, information gap and quicken the sort of approval of some of these things.
Uche, in the Nigerian context?
No, I think in the Nigerian context, there are probably three things I'll speak to. The first is the government has come to recognize how important this is, and you can attest to that. There are three things we'd like to help solve. The first is obviously getting these companies access to capital, right? Access to debt. And there's a program that we've just launched recently. It's called the Development Bank of Nigeria, which is a bank that we are seeding at the NSIA along with the government. And that's going to provide capital to small and medium-scale enterprises. And I think fintech is going to be one of the areas of focus. The second area is trying to make sure that we increase the access to broadband technology. And I think it's still an area where people are struggling. And you see that with wireless, in Nigeria, trying to access data can be difficult. there's a lot being done there to try and make this easier, but it's an area of investment that we actually at NSIA are also now beginning to look at. We did look at a few of them. Zuckerberg's visit was fantastic. I think it put it on the front burner. The likes of Andela, which was an area for investment that we initially looked at, I now regret, I wish we did participate. But there's a lot of that is coming through that you're going to see us actively participating. But there's encouragement for that sector in Nigeria, absolutely.